Good afternoon or good morning, I guess, depending on where you're listening to us from today. My name is Scott Maurer with Advanta IRA, and we're going to talk today. This webinar today is specifically talking about the Checkbook IRA, kind of how an individual can use your IRA funds in such a manner to make investments where you actually have a greater degree of control over those funds in your IRA. So we're going to go over the different types of ways you can get the Checkbook IRA, contrast it a little bit with, if you weren't using the Checkbook IRA structure, and certainly go over some of the rules that are involved as well. As I mentioned, my name is Scott Maurer. I'll be joined today by my colleague. You'll be hearing from Alex Perny here in just a few minutes as well as we go through the presentation and sharing our knowledge and expertise on the information you're going to hear today. Now, if you're listening to us live and you have any questions for either Alex or myself as you go through the presentation, please type those in the question box on the screen. We'll make sure we get to those as you get them typed in to that chat box. Also, if you're looking for a copy of the slides, you can go to the handouts section of the GoToWebinar platform as well and download the PDF version of the slides if you want to refer back to them at some point in the future. So again, my name is Scott Maurer. I'm the Director of Business Development for Advanta IRA. My contact information is on the screen. Again, you'll hear from Alex here in just a few minutes as well. He's going to cover some of the different slides as we go back and forth during the presentation today. I did want to introduce our disclaimer here at the beginning. We provide a lot of educational value and events that we do for our clients and prospects and anyone in our database. But the webinars that we do are always for informational purposes only. Advanta IRA as a company and its employees do not provide investment advice. We don't endorse any particular investments or any particular products as well. Now, during our presentations, a lot of times we do get into legal and tax issues, and we're happy to discuss those. When you're going to make a decision based or looking at it from a legal perspective or from a tax perspective, we encourage you to consult with your attorneys, your accountants, tax professionals, et cetera. And if you ever need a referral for someone who is familiar, one of those professionals that's familiar with self-directed IRAs, please just reach out to us. We're more than happy to connect you with somebody else that would be able to give you that type of information and guidance. Just a quick background on Advanta IRA for those of you who are unfamiliar with our company. We've been around for almost 20 years in the industry. Our office is comprised of a lot of different various professionals. Both Alex and myself are certified IRA services professionals, which means we've gone through a little bit extra training on some of the intricacies of IRAs. And over half our office are composed of CISPs. We have over $1.3 billion in assets under management between our two offices in Tampa and Atlanta, but we do work with people all across the nation. How we try to set ourselves apart at Advanta, again, from other people and other companies in the self-directed space, really is our focus on our personal customer service experience. So we point every new client to a dedicated account manager, that one point of contact, one individual in our office who will help you through anything you need regarding your account, help you through your investments. You'll have their direct phone line, you'll have their direct email. So we really found that to be very successful and got a lot of positive feedback from individuals with that level of customer service. So before we jump in and talk more really about specifically the checkbook structure, make sure everybody's on the same page when it comes to really self-directed IRAs in general. And then we'll kind of again transition that and talk more specifically about the checkbook structure. But for those of you who may be newer to self-direction or maybe brand new learning for the first time, what is a self-directed IRA account? So a self-directed IRA is the type of an account where the owner has complete control over the retirement funds and their investing decisions. So you have the IRA funds, you make an investment. Typically, if you have an account with a bank or brokerage firm, they're going to limit you to those things that they sell. But there's a lot of other possibilities, a lot of other potential investments that you can make within your IRA or within your retirement account. And a self-directed IRA gives you that ability to choose from a number of different asset classes, not simply choose from the same asset class. For instance, you can't, as opposed to just buying and choosing different mutual funds in a Vanguard account, you can invest in, real estate, mortgages and notes, private placements, precious metals, and so much more. And as we talk today about the checkbook IRA, what's so appealing to some people about that is the checkbook IRA almost gives you as well that one place you can, one entity that you can set up, one structure, and still be able to invest in all of these different alternative investments all within that same LLC structure, or possibly a trust if you use that, as we'll go into in a little bit. Again, those of you who are newer to self-direction, we get this question quite often at Advanta: is why haven't I heard of a self-directed IRA before? This is, I've had a retirement account or I've had an IRA for years, and I've never heard that I could invest in real estate or I could invest in these alternative assets. And I think typically the reason most people haven't heard of self-direction is that most IRAs, most retirement accounts, are administered by banks or brokerage firms that offer, again, their clients only those products that they sell. So if you have an account with a brokerage firm, they're going to offer you mutual funds and stocks. It doesn't make business sense for them to offer you real estate, private placements, precious metals, or private lending, because they don't hold those assets. They don't want their clients taking that money and moving it out. So again, most people have simply not heard of self-directed IRAs because their current custodian is not making those types of investments available to them. Now, the IRS regulations allow for a very broad range of investments. We're going to go over a little bit later what some of the rules are. In fact, the IRS rules regarding the investments in an IRA account simply say the only things, they only outline what you can't do within the IRA as far as the investments you can't make or people that you can't deal with. But other than that, the IRS regulations are fairly broad. So nowhere in the IRS code does it say, I can't invest in real estate, or I can't invest in notes, or I can invest in stocks, or I can invest in mutual funds. That doesn't appear. It's only very small or simple rules, very straightforward rules on things that you can't do. So the IRS regulations allow for a broader range of investments, but it is up to your IRA custodian to decide what they're willing to hold. And again, with a bank and brokerage firm, they're limiting you to holding only those products that they sell. And again, at Advanta, we don't sell any products or investments, so that's why we hold pretty much traditionally just the alternative investments that we're going to talk about today. And it's important to understand, I think, when we talk about self-directed, it's important to note that the word self-directed, someone says, I want a self-directed IRA, that's not a particular IRA necessarily that the IRS recognizes. The IRS recognizes IRAs by their monikers of traditional or Roth or rollover IRAs, or perhaps a SEP or a simple. Self-directed refers to your ability to use one of those types of IRA accounts to invest in the alternative assets. So with Advanta, if you're looking to self-direct and invest in these alternative investments, if you have a traditional or a Roth IRA as an individual, those can certainly be self-directed. You just have a self-directed, say, Roth IRA account. So we offer traditional and Roth IRAs for individuals. If you're a small business owner or self-employed, we offer both the SEP IRA and also the simple IRA, and also an individual K or individual solo 401k plan available to those individuals who are sole proprietors as well. But when considering if you're looking at monies you already have at other firms, if it has a designation of an IRA, you can certainly move that money over and self-direct it. Also, any former employer plans. So if you worked for a company or you worked for the government, you have a 401k from a past employer, or a 403b or a 457 plan. If it's a former employer's plan, that money can also be rolled over and self-directed inside of just a regular IRA account. The only restriction on the types of retirement funds that you cannot self-direct at times are current employer plans. So the 401k, the 403b with your current employer, a lot of times there are restrictions on moving that money while you are still employed there. But again, once you leave an employer, you retire, you get laid off, you just simply leave the company and take another job. Now becomes a former employer plan. That money can certainly be self-directed. And again, any type of IRA that you have can be self-directed by simply filling out the right paperwork to get those assets moved over. And again, as we'll talk about in a lot of our presentations, and I would encourage you, we have a YouTube page that we're recording today's webinar. You can go back and listen to it in another day or two on the YouTube page, but also our other webinars talk about a lot of the different types of assets that you can invest in with your retirement account. And again, I talked about the IRS regulations only outline the few things that you can't do. They don't list all the possible investments, because really the list is really endless. And as you can see on this slide, we're listing, over 20 something different investments here. And that's really, again, just kind of touching the tip of the iceberg. We'd see a lot of clients invest their retirement accounts in real estate based assets, the rental homes, fixer uppers, multifamily syndications, raw land, or also investing maybe in mortgage loans or tax liens and tax deeds that are also tied to real estate. So probably 70% of the assets that we hold on behalf of our clients in their retirement accounts are in their real estate field. We also hold a number of other alternatives like private stocks, hedge funds, precious metals, private LLCs, etc. So again, the key thing is just to remember with a self-directed IRA is that you can hold all of these different types of assets in your account. And what we're going to talk about today, as I transition to Alex here in just a second, is have Alex talk about the checkbook structure. Whether you're investing through the IRA or investing through your checkbook structure, all of these investments are certainly possible. So this time I'm going to bring in my colleague Alex Perny to really tell you now specifically what checkbook control with an IRA is.
Hi, thanks, Scott. So essentially what I want people to understand from this portion of it is that when we talk about checkbook control, there's a few different avenues that you can go through this, and it all accomplishes the same goal. We're going to be covering trusts and LLCs in this, and the basic concept is that the IRA will wholly own the entity that then in turn has the checkbook that you control. And there's a few benefits and drawbacks to either using an LLC versus a trust, and we'll get into that in a minute. But it's important to understand what you're actually getting away from and what you're actually gaining with checkbook control. So under the typical custodial IRA or an administrated account, the control of the checkbook and all of the uninvested cash stays with the custodian. So in this case, if you bought a piece of real estate directly in the IRA, we'd be signing everything, and any type of bills that need to be paid or any type of closing costs that need to be paid regarding something would be issued directly from the account that Advanta administers. And then any type of income and deposits also come back directly to us. You don't have direct control over the checkbook. You submit requests to us for payment and they go out within 24 hours of receipt, or you can use our online portal. It's important to understand that the potential gains from using checkbook control can be a little bit disproportionate of what you might see if you're just reading literature and not actually talking to someone that understands and sees this regularly. But you do gain a significant amount of control when you utilize checkbook control, whether it's a trust or an LLC. Now, in this case, remember, the IRA owns the entity that is going to be utilizing the checkbook control. So you personally obtain control over the cash using a third-party bank account. You can utilize whoever is local to you. A lot of people use big banks. A lot of people use small local banks. It's really kind of up to you as to where you want to hold funds for that entity once checkbook control is reached. And then you have the ability to issue payments directly out of the account, and then you receive the payments into that account for any type of income. So that's going to be things like rental income. It's going to be things like note income and the like. So it's important to understand where the income from the investments go and then where the expenses and everything are paid out. Now, again, we are going to be focusing on trusts and LLCs. They're very similar in their function in just an administrative capacity. So whether you use one structure or the other, they're very similar in what they allow you to do, but they are very different in a legal sense. And it's important to understand the different parts of each in order to be able to properly utilize whichever one that you're going to be using. So with regard to an LLC, you're going to have a few different parts to this. You're going to have the manager, which in some cases, in cases can be the client. So if you'd like to do that, we will allow you to be the manager of the LLC. Keep in mind that that is the person whom is going to be signing everything, is going to be in control of that checkbook. So the person issuing payments, the person that is going to be signing everything at closing can be the client, and that is the manager of the LLC. In a trust, you have a trustee. Operates the same as a manager, but it crosses into a line of a fiduciary for the actual entity. And unfortunately, due to IRS regulations, client or account holders are prohibited from acting as a fiduciary to their IRA. So we do not allow clients to be the trustee of their IRA-owned trust. You will need to have a third party do that for you. Now, in both regards, the trustee or the manager are going to be writing checks, whomever that is, the title of the asset ownership. So just if you were to buy something personally, let's say John Smith purchased a house, it's in the name of John Smith. In the case of the IRA-owned LLC, it's going to be in the name of that LLC directly. So John Smith IRA LLC it's going to be in the title of that, or John Smith IRA Trust, it's going to be in the name of the trust. So when you pull up the public record of, let's say, a deed or a recorded mortgage, that's the name that's going to go directly on those documents. And then when you're looking at the actual ownership of these entities, because remember, again, the IRA owns this entity. It is sitting underneath of the IRA as a buffer between the investment and the IRA. The investment documents are going to need to name the IRA as the owner. And it's done in a case of an LLC, the IRA becomes the member. Typically, it's the sole member, but you can do multi-member LLCs. You just need to keep in mind that there might be some additional bookkeeping requirements if you utilize a multi-member LLC. And in the trust, it's going to be the grantor beneficiary, meaning that the IRA is granting in the initial capital for the trust, the initial grant of capital, and then it also is receiving all the benefits of the investments held in that trust. So the IRA is going to act twofold in the trust as the grantor and beneficiary, and singularly just as the member of the LLC. Okay, checkbook control, key components, and checkbook control IRAs. So there's a few different parts to a trust. Now, trust law has been in existence for a very, very long time. It is something that is kind of a lot to unpack just in a general sense of what we're going to be covering here today, but it's important to understand at least the basics. There's a few different kinds of trusts out there, and again, way more than we're going to cover today. And you can kind of utilize whatever you best feel is going to work for you, but most of the time our clients will use some type of, again, it has to be a grantor beneficiary trust, but some model of a personal property trust is what most people go to if they utilize the trust. But you could be a revocable trust, special needs trust, life insurance trust. These are all different kinds of trusts that are out there. We encourage you to do your research. You would need to get some counsel. As Scott mentioned, we are not legal advisors. We can't advise you on what is going to fit the best for you. We can educate you on the different parts and how to make the most informed decision, but ultimately you need to get some advice on if you want to know what specific structure of trust will work best for you. Now, the parties in a trust, as I covered in the last slide, you have the grantor. They're the one that contributes the assets into the trust. So essentially, that's going to be the IRA. The trustee, which is acting in the managerial capacity of the trust, they're the ones that sign the checks, they're the one that sign the contracts and everything, and then the beneficiary. So unlike with the LLC, where the member kind of functions in both the grantor beneficiary role, you have to kind of divide that out with a trust. And again, down at the bottom, when an IRA invests into a trust, it's important to remember that the grantor and the beneficiary have to be the same in being the IRA, and the IRA owner cannot be the trustee. So with the personal property trust, you have a few different things that are going to be held underneath of the trust. You're going to have the bank account, which is going to be in the name of the trust itself. You're going to have that third-party trustee. Now, that can be anyone that is not a prohibited individual from you directly. So it can be a trusted friend, a colleague. It can be your brother or sister. It cannot be yourself personally. It cannot be your spouse or any lineal descendant or ascendant of you personally. So keep that in mind, that you have to have, you can't have any one of those individuals be the trustee of that. And then once you have those things in place, you utilize the checkbook control. Now, a lot of people, especially here in Florida, if you're listening to us, will think that a land trust is exactly what they need. It can sometimes function in that capacity, but just keep in mind, I like to kind of put my own little twist on this, is that especially in Florida, we have a land trust that does not have a bank account. That's not something that would really work for this. With checkbook control, you want to have that bank account in the name of the actual trust. So again, these are treated more just like real estate, but they're not necessarily in the realm of the personal property trust for checkbook control. So do your research. We can help you out with more on the land trust specifically. They don't always utilize checkbook control. If you are utilizing a land trust and that's what you really do want to do, keep in mind that Advanta IRA can act as the cash management service for that, and we can pay any expenses and receive income directly on behalf of the land trust. So you maybe just want anonymity for your IRA or for any other particular legal reason that you've been advised on want to utilize a land trust, we can work with that. It's not a no-go for us. You just need to understand where the services demarcate between what we will and won't handle when you're using personal property trust versus a land trust. So with that said, I'm going to hand it back over to my colleague Scott. He's going to be covering the key components of the LLCs in a little bit more detail for you.
Okay, thanks, Alex. So yeah, so we talk about, obviously Alex just covered the trust and the different parties and different people that are involved. We do honestly see more checkbook control in the arena when it comes to people using LLCs. And so it's important, I think a lot of people on the call, and certainly a lot of the people we talk to who've used their IRAs to get checkbook control are already somewhat familiar with LLCs. But kind of as a recap, I think it's always important to know the different parties involved. So with an LLC, the shareholders, the equity owners, they're referred to as members of the LLC. So, so opposed to being a stock shareholder, if you belong to an LLC and you're an ownership in it, then you are a member of that LLC. The manager of the LLC is the person or individual who is basically in charge, making the decisions, signing documents, et cetera, overseeing the aspect of the LLC. Now, in a lot of circumstances outside of the IRA, some of the members are also the manager. If I was setting up my own LLC, I might be the owner, but I also might be the manager because I'm in charge. But when the IRA is involved, and you're getting checkbook control through the LLC, your IRA account as its own separate, distinct entity is the shareholder, is the member of the LLC. So we'll always look for the paperwork to show the IRA as the member, and then typically you as the individual or IRA owner is listed as the manager. You're going to be the one signing the checks, making those decisions on those investments. Both of those terms, and certainly all the other documents that go along, or all the other provisions you want inside your LLC, are found in the operating agreement. So the operating agreement of the LLC, similar to the bylaws of a corporation, the operating agreement is going to list who the members are, their ownership percentage, list who the manager is. And again, when we talk about kind of pure checkbook control, it's typically the operating agreement is listing your IRA as the sole member and listing you as the sole manager. Now, just some rules to keep in mind when you're looking to use your IRA and setting up this checkbook structure within an LLC. There's some rules you need to make sure to follow. One is that the LLC itself must be manager managed. So the actual management of the LLC needs to be vested in a manager, an actual person, aside from your IRA. There are some states that allow the LLC to be managed by the members, but in this case, since your IRA is the member, your IRA cannot also be managing. It's an inanimate object. It's an entity, but it doesn't have an actual ability to sign. So it's important just to note that it must be a manager managed LLC.
Hey Scott,
even though
just to interject on that point real quick, we just had someone ask the question, when a client acts as a manager of the LLC, that seems a bit close to acting as a fiduciary, which is prohibited in the trust format. So I think that interjects real well into these rules if you want to cover that.
No, definitely. I'll definitely touch on that. Yeah, thanks, Alex. Thanks for that question from the listener. So again, and I'll get to that in just a second, but when you're doing the checkbook IRA and you're doing it through the LLC, again, most times it's one IRA, it's one person's IRA, and they're the manager, and that's it. But it is possible to include more than just an IRA and have other people involved. You just need to indicate on the LLC paperwork the ownership percentages between each member. So if your IRA is contributing 20% of the capital to an LLC, it needs to be reflected that your IRA owns 20% of that particular LLC. One of the risks, though, if you do look to doing and bringing in multiple members in the LLC, is simply that if there's additional capital that's needed down the line, you want to have an additional influx of capital, your IRA needs to meet its percentage of capital, and it must be done according to the ownership percentages. If you start having situations where some members are contributing more or less than the percentage they own, now we're starting to change the actual ownership percentages, and that can be problematic with your IRA invested into an LLC. Not necessarily, but just something to think about. So a lot of times, again, the checkbook structure is simply one person's IRA account and that person acting as the manager. Benefits, again, if it's a single member entity as well, is typically there's no tax return that's required. A single member LLC is typically a disregarded entity. And since the IRA itself does not need to file a tax return, then the LLC does not need to file a return as well. Downside, if the entity is a single member LLC, depending on your state, and this would be a great thing for everyone to look into, the states that they, wherever you're looking to set up your LLC, what type of liability protection do single member LLCs enjoy? And for instance, in Florida, there's very little, if any, liability protection for single member LLCs. So just keep that in mind. Now, getting back to the question the individual asked a minute ago, if you're, why can the IRA owner act as a manager? It seems they may be acting in a fiduciary and therefore causing something that could be prohibited. There are two court cases that came before the tax court. One was Swanson v. Commissioner in 1996. The other was a case that came before, and the decision was issued by a tax court memo with T.L. Ellis only about 4 or 5 years ago. Both of these cases, the IRS challenged the Checkbook LLC structure, saying that an individual IRA invested into an entity, that the IRA owner cannot act as the manager, cannot act as a president even of the corporation, that would violate the rules on prohibited transactions and some of those fiduciary rules. In both of these cases, the tax court ruled in favor, in one sense, of the IRA owner, saying that it is not prohibited for the IRA owner to simply act as a manager. When you're creating a brand new entity, that this is not an issue. Now, in the case of Ellis, if you read that, the case did not go well for Ellis, because one thing he was doing, he got some bad advice. Not only was he acting as the manager, which again, according to the case law with Swanson, was not a problem, Ellis was also paying himself. So he was having the LLC pay him a salary. That was prohibited. There was no doubt about that. But as far as the case, there is case law to support you being the manager of your LLCs. That's why we permit it within the account, and that's why we draw the distinction between that and between the actual trust that Alex talked about here in a minute, or talked a few minutes ago. So take a step back just for a minute and go over some of the self-directed IRA rules, things you can and can't do within an IRA account. And then we'll get into some case studies really to illustrate how you get to checkbook control, what are the steps you need to take, and what does that look like when you're involved in doing either an LLC or a trust. So as I mentioned at the very beginning of the presentation today, the IRS does not have rules for all of the permissible investments you can hold in an IRA. They only list things that you can't do. And the only prohibited investments that you cannot hold inside of a retirement account is you cannot hold life insurance, and you cannot hold collectibles. And collectibles would include your antiques, alcohol, some collectible coins. There are some coins that are permissible if they are gold or silver American Eagles, for instance, where the value of the coin is based on the value of the metal. So those are the only two prohibited investments within the IRA account. Now, the other thing the IRS does is they say if you're buying an investment that's allowable, if a disqualified person is involved in transacting with your IRA, or they're getting any kind of benefit, that can also be a prohibition inside of your IRA account. So the IRA being on one side of a transaction, if a disqualified person is on the other, that can make the investment you're making prohibited. So even if you're investing in a piece of real estate or you're buying a note or mortgage, if the IRA is on one side of that deal and the disqualified person is on the other, that can be an issue. And we're going to talk about disqualified persons here in just a second. Also, just to keep in mind, if your IRA ever invests into an ongoing business enterprise where your IRA is receiving business income rather than investment income, your IRA can be subject to unrelated business income tax. And if your IRA is investing in leveraged real estate, it can be subject to unrelated debt financed income tax. So a lot of the benefits of investing in IRAs is that the fact the income that's generated comes back either tax-free or tax-deferred to your account. But these are the two rare instances in which your IRA may be subject to a tax. Again, these don't pop up too often, but just be aware that that is out there. So again, no life insurance, no collectibles, and your IRA cannot make investments or transact with a disqualified person or make an investment in which a disqualified person receives a benefit of the plan. So it's always important to note who the disqualified persons are. So for me, that the easiest way to understand this, if you look towards the right there of the different people laid out, just picture yourself. You're the IRA holder. For you, who would be the disqualified persons to transact with your IRA account? So the disqualified persons include yourself and your spouse, your parents and grandparents, your kids and grandkids, and also any daughters-in-laws and son-in-laws are also prohibited as well. Anybody who's married to a lineal descendant. This also includes any business or entity that is owned or controlled by the above. So a couple quick examples of things you can't do if you want to have your IRA make an investment and you want to buy a piece of real estate and you're going to buy that piece of real estate from one of your parents. That's a direct prohibited transaction where your IRA is on one side of the equation, a disqualified person, in this case your parents, is on the other. That's not allowable. As far as getting a benefit, an example of that is if your IRA to invest and buy, say, a condo on the beach that you rent out for most of the year, but every so often when it's not rented, you and your spouse or your family goes and stays in that property. That's you as an individual getting a current benefit from your IRA account. So best piece of advice is kind of when you're looking to make your IRA investments, again, stay away from life insurance and collectibles. And then also if you're making an investment into a piece of real estate or a loan or a private placement, make sure that no other disqualified person really is involved or is on the opposite side of that particular transaction. So again, we're happy to answer more questions on disqualified persons, but right now I'm going to send it back over to Alex to talk about we're going to go over now the different ways you can structure and get checkbook control for your IRA with the different structures that are available to you.
Yeah, thanks, Scott. Before I jump right into that, I'm going to go through a few questions that we got. So we have one individual asking, for California residents LLC, is this subject to California franchise tax? In all honesty, I am not sure on that with regard to that. So things that typically don't get exempted from tax when utilizing checkbook control IRA LLCs would be things like obviously your property tax that's assessed to the property. You don't get exempted from that. That's associated to the asset, has to be paid. Now, in some instances, I'll use, for example, here in Florida, if you rent anything on a short-term rental basis, you have to pay state sales tax. So in that case, your IRA would have to pay state sales tax, but it would be exempted from any type of ordinary income tax or potentially capital gains from the sale or the utilization of that property. So with regard to a franchise tax, I'm not sure. That I would think that, I don't really know a lot about California tax code, but potentially, but you would need to check with someone that's an expert in your state regarding that particular question. Then we have another question asks, so a self-directed checkbook LLC cannot be set up under an existing revocable trust controlling non-IRA assets. That is correct. So if you have an existing trust that manages personal property or personal assets, that wouldn't really have anything to do with the IRA. The IRA, in a general sense, is always going to stand alone from any of your personal assets or your personal structures of different types of things that you're doing. So it's important to understand that those things are always going to remain separate. So with regard to the existing trust, you would need to set up a new IRA-owned LLC or a new trust in order to handle your IRA checkbook control needs. Then we also have what are the rules and limits of capital contributions to the LLC from the IRA? Can one add assets from the IRA to the LLC after the initial contributions? Are there restrictions on how much of the LLC assets can be returned to the IRA? That's a really good question. And it's going to be kind of expanded upon in these case studies. But the easy answer is for a single member IRA-owned LLC, there really aren't. So if you have an initial, let's say, $100,000 capital contribution, your IRA is the sole owner, and you have other things in your IRA, such as a piece of real estate, and you want to put that into the IRA-owned LLC. So long as the assets in cash are coming directly from the IRA, and the IRA that owns the LLC, you shouldn't have an issue with that. Now, if you get into multi-member LLCs or if you're partnering with disqualified individuals, those rules can change. But for the simple answer of single-member IRA-owned LLC, you really don't have an issue there. And then also, are there restrictions on the amount of the LLC assets can be returned to the IRA? That's really good because it gets into a little bit of a later slide, and we'll cover that in more detail, but no, there isn't a restriction on it. And there is requirement to return all profits eventually to the IRA directly if you want to take a distribution. And before I get started, I'll just finish up all the questions. What are examples of business income which would be subject to UBIT? Now, that is a conversation all in and of itself, but think about it like this. If you are going to own something like, let's say, if your IRA were to buy a laundromat, that has employees, that has people coming in every day collecting coins out of the machines, that is ordinary business, and that is unrelated business income to the purpose of the tax shelter of the IRA. It would be subject to UBIT tax. Now, there are a lot of different shades of gray on UBIT, and it's kind of hard to get into it because it literally is its own standalone presentation and class. But that would be a big example if you're just buying an existing business. Or if you're utilizing debt financing. So if you're acquiring a piece of real estate with a non-recourse loan, that would have some aspects of UBIT under UDFIT, which is unrelated debt finance income tax, to be considerate of. So great questions. Thanks for asking them. So let's jump right into the case studies. So Joe's going to purchase real estate with an IRA. So he has $150,000 in a traditional IRA and is interested in investing in real estate, and decides on a single family rental for his property portfolio. He finds a house for $100,000 and it needs about $20,000 worth of work to get it ready to rent. He projects the property will net cash flow of about $1,000 a month after repairs. So how can he buy this property? So in this case, he's going to buy it through the IRA directly. So in this case, while not utilizing checkbook control, it's important in this case study we're focusing on how it looks to buy the property directly in the IRA without utilizing a trust or an LLC. So the front load of this is always going to be the same. You need to open the account. That's the first step in all of this process, is to get the account open here so we can help you with whatever procedure that you're going to move forward with. So he completes the IRA application. He transfers, rolls over funds from an existing IRA or 401k, and we get the account open. It's typically 24 hours or less before we get that done. Now, instead of moving forward with an entity, we're going to be directly purchasing the property in the IRA. So the contract is going to be written in the name of the IRA. The settlement statement, any and all documents relating to this IRA purchase are going to be in the name of the IRA, not the client personally. So Joe's name as Joe directly is not going to be on there. It's going to be part of the vesting of the IRA, but he's not personally signing this stuff. He's not personally funding it. It's all coming through the IRA. So the contract is written. It looks like Advanta IRA FBO, so for benefit of Joe Smith IRA and his account number. He needs to approve the contract before we execute the document, and then the escrow deposits are issued from the IRA as well. Now, keep in mind that may seem like a lot of steps, but we try to make this as seamless as possible, where if you have a contract, you can send it over to us. We'll accept it through our DocuSign portal for your approval to execute everything, and we typically turn things around within a couple hours on the same day, so long as it's not, right up against our closing time. So again, it is more steps, and checkbook control can help alleviate some of this interaction, but again, it's not too terribly cumbersome. Now, at closing, he must read and approve all the documents. Again, all of those documents that are going to be related to the closing, and with a piece of real estate, you're going to have minimum have a contract, a settlement statement, and a deed. So you're going to have that deed. It's going to be in the name of the IRA. The settlement statement's in the name of the IRA. The contract is. All of those things need to be reviewed and processed by us as the administrator of that account. So we have a good question. Why can we not submit the contract as a manager? So again, this is just focusing on not utilizing checkbook control. So if you are utilizing checkbook control, you do sign it as the manager. In this case, we're just focusing on, if you don't use checkbook control, what that looks like directly in the IRA. So to the question of that, you absolutely can and do as the manager sign that. So then after the closing is completed, representative IRA, to complete the closing, one of our representatives signs after the approval from Joe. We wire the funds to closing, and then Joe finds his tenant and then gets them into the property. We sign the lease agreement. So after the closing, what's it look like? So the IRA now owns the property. So what are we doing? So Joe directs that all expenses, taxes, maintenance, insurance are paid from Advanta from the cashier. We can automate a lot of those things. We get pre-approval to pay the taxes on an annual basis when we close on a piece of property. So we make sure that everything is as seamless and as automated as possible, so you don't need to worry about sending in a property tax bill or an insurance bill. We try to get those things automated to make it as smooth as possible. And then you can track all the activity in the account. He utilizes our online portal. We send out email notifications, and you can even pay bills through our online portal as well. So going forward, he just utilizes that to track the activity. Excuse me. And monitor his email notifications in order to stay on top of what's happening. Now I am going to try to advance the slide. We're going to turn it over to my colleague Scott again, and he's going to go over some of the utilization of checkbook control in the same fashion.
All right, great, Alex. Thanks. So yeah, the last example we had when we were looking at Joe, he's buying the investment, going through Advanta, which again we're more than happy to do, and a lot of our clients choose to do that, where we help with the purchase, we help go through that process, we hold the funds, we wire the funds, and going forward, we're issuing the checks for any expenses, and Joe's having his tenants send the rent checks each month right back into the IRA with us. But again, some people, either it's a personality or maybe the types of investments they're looking to make, really want to have that greater control over the funds. That's really what we're talking about today, is the checkbook control. And so this second way that Joe can make this investment would be by using the LLC itself. So we're going to talk a little bit through what that process looks like if Joe wants to do checkbook control and use the LLC to do it. So as Alex mentioned, the first step up front, always the same with Joe. He's opening up his account, funding it by either transferring money from another IRA or rolling over from a 401k. And so we have the account set up. We're getting money transferred or moved from his other custodian. But in this case, when Joe wants to use checkbook control, rather than sending us the real estate contract or any of the anything related to the piece of real estate, what we want to see at Advanta is information about the LLC that he is establishing. So from Advanta's perspective, as the custodian of the IRAs that we hold, we always want to see the ownership documents for the direct investment that the IRA is making. So if you are buying real estate, as in case one, directly through the IRA, we want to see the contract and ultimately all the closing documents for that piece of real estate. But when Joe, in this case, is using an LLC, the direct investment for the IRA will be buying 100% of the stock and the membership interest in the particular LLC. So in this case, the investment that's going to show on Joe's account statement with us is the actual private LLC that he holds. So again, that's the paperwork and the documentation that we're going to want to see at Advanta. So Joe gets his IRA account opened. His next step is then to form the LLC, which whatever state he chooses to set up that LLC in, and choose a name for the LLC. It does not have to mention him or his IRA. It can be whatever he chooses for the name of the LLC. And then the articles, again, now the articles are what are filed with the state. So if you were to go on the public records of any state, usually you can search through any corporations or LLCs registered in that state and see the articles of organization. In this case, the articles of organization that are filed with the state should name Joe as the manager and should have the name of the LLC and the address, but you're not required in most states to name who the member is. So the IRA actually does not show up anywhere on the articles that are filed with the state. What we will want to see is the operating agreement or the operation agreement for the LLC that lists the IRA as the owner. Now, the operating agreement is a private document. The state does not require you to file an operating agreement with them. So it is a private document, but that's where the ownership in the LLC is going to be documented. So this is, again, the piece of paper that we want to see for the IRA's ownership. Again, if he was buying real estate directly, we'd want to see the deed where the ownership would be reflected. In this case, because his IRA is going to own an LLC, we want to see the operating agreement showing the LLC or showing his IRA as the 100% owner and also showing Joe as the manager. So you can see the wording, the same wording that Joe used in the first case study on the real estate contract is going to appear in the operating agreement. Advanta IRA, for benefit of Joe Smith's IRA and his account number, is the legal name and legal wording to use for the member in the operating agreement. So again, we want to see that operating agreement. We will review it only from the perspective of making sure the IRA is properly listed as the member and that Joe is listed as the manager. We will have Joe, again, similar to the first case study, Joe's going to approve the LLC operating agreement. And at that point, we will actually sign the operating agreement on behalf of Joe's IRA as the member in the LLC. And then we can then issue a check or a wire from his IRA account to fund the LLC. So instead of funding a real estate closing directly, Joe is going to get a bank account opened in the name of the LLC, in which he can deposit the check or we can wire money directly from his IRA into the LLC. So Joe, in this case, does not need to leave any cash with Advanta. He can simply move all of that cash into the bank account for the LLC. Now he has, as the manager of the LLC, checkbook control to write checks out of that account, make the purchases. So when Joe goes to buy real estate or really any type of asset from the LLC name will go on those ownership documents. So the IRA is the member of the LLC and is reflected in the LLC operating agreement. But when Joe goes to buy assets, he's going to make sure those assets are properly titled in the name of the LLC. And now he will actually sign the documents on behalf of that LLC in his role as manager. So Joe's effectively taken some of the work that Advanta would do when helping with the transaction, and he now has the control and the authority to do that. So going forward, again, in case study 1, Joe's tenants are sending the rent checks to Advanta, and we're paying all those expenses on behalf of Joe's IRA. With the checkbook control, and this again, one of the reasons a lot of people use this structure, Joe will deposit the rents from his tenants back into his LLC bank account. And when any expenses show up, the taxes, the property maintenance, insurance, etc., he will simply write a check out of that LLC bank account to pay those bills. And so he can use the cash. If he has extra cash in the LLC, he can reinvest. He can invest in other assets. He can hold a brokerage account. So we've seen people use checkbook control not just to buy one asset, which some people do, but you can actually use the LLC to invest in a number of different assets and hold them all in one place and make it more convenient. Again, let them have control over that. So that's checkbook control using an LLC, and that's again typically what we see more often than not when people are looking to use checkbook control. It's by establishing it through an LLC, but it is possible, we talked about, to do it as well in a private trust. And so I'm going to turn it back over to my colleague Alex here to talk about how checkbook control is structured when you're looking to invest in a private trust.
Absolutely. Thanks, Scott. So before I get started directly on the trust, go back one slide. Before I get started directly on that, we had a bunch of questions file in, so I want to get some of those answered. One was a really good one, and I actually had some experience with it this week, and I have a lot of experience here at Advanta doing this. Is it possible to purchase foreign real estate for your Advanta IRA? Absolutely. Personally, I have experience in my time here at Advanta of buying property in many South and Central American countries. Just this week, I had a conversation with an individual about buying property in Belize. I've also had experience in Panama, Colombia, and Costa Rica. And the laws are all very similar for Central and South American property purchases. I could go on at length for that question, but the short answer is yes. But you would need to check with the laws regarding foreign direct investment in whatever particular country you'd like to invest in to see what their particular mechanisms of purchase are. But if you want to give me a call afterwards, I am certainly happy to go down that rabbit hole with you of what it looks like to purchase property in a foreign country with an IRA. But great question. So the questions regarding the articles were all answered. Here's a really good one, especially before we get into the trust and also LLC case studies, are the fees associated for establishing an LLC, and I'll just interject trust, paid for by the IRA. Also, does the Advanta have a list of law firms that work specific in this area? To the answer of the referrals, absolutely. We can definitely give you a list of people that can help, that have helped other clients of ours do these types of investments. Again, we don't have any financial referral fees that are paid. Clients that use them have been happy, and we just keep them on a list for you. And then the fees associated with paying the LLC need to be paid by the IRA. Ideally, yes. Typically, most of the time, especially with people that utilize us, they invoice the LLC after we have funded the LLC, and you'll just write a check to them directly for the services that they render. And then we also have a question, wouldn't the bank require the operating agreement? Typically, no. That is a private document that is not typically provided to a financial institution. You would just need to provide them with a copy of the articles showing that you are the manager of the LLC, and a copy of your SS4, which is going to provide the tax ID number for that LLC, and then that will typically be what you need in order to provide them to show your ability to sign and open that account. And then also with regard to a trust, typically you don't need to provide them with the whole trust document. You would need to provide them with the cover page showing the effective date and then the signature page showing the signature of the trustee. They may have different requirements for their trust compliance. They may need the whole thing, but at least with an IRA, at least with an LLC, typically you do not have to provide the operating agreement. Now, through a trust, so again, we go back to this beginning, the first step in this process, no matter if you do the transaction directly in the IRA, you do it through an LLC or a trust, you need to open the IRA first. If you do, by chance, set up an operating agreement first or a trust agreement, you're going to have to amend that document. There's no getting around it. You don't have the account number. You have to get the account open first. Now, unlike with the LLC, with the operating agreement, we're going to be focusing on the trust document. Now, keep in mind that there are two places that the IRA is going to be named with regard to the trust document. It's going to be listed as the grantor and the beneficiary of the trust, meaning that the IRA is the one putting in the capital and then receiving the benefit from any returns on that capital investment of that trust as well. And both of those are exactly the same naming convention, the Advanta IRA for benefit of Joe Smith, IRA number. Now, again, Joe can name any non-disqualified person as the trustee, those being anyone that is not a lineal descendant or ascendant of Joe personally, so no mother, father, son, daughter, or spouse. Brothers and sisters are okay. Again, that is exactly by the letter of the ruling for the IRS. It is exactly what they say, so there's really no ambiguity to that one. And trusts are not public record. The only thing that is going to be popping up in any type of public search would just be the fact that the trust has a tax ID number. And sometimes that even might be hard to come by with regard to just a general Google search. So trusts offer a greater degree of anonymity, but they also have some other things that you have to consider, like not being able to be the account owner trustee of the trust. So there is some give and take with that. Now, again, just like with the LLC operating agreement, Joe read and approves the trust before we execute the document on behalf of the IRA. The trustee also needs to sign that document in order for it to be completed with all of the signatures before funding. Try to advance the slide. Okay, so we have funded the trust agreement. Now, unlike with the alike with the LLC, he has to obtain a tax ID number before he can open the bank account. He has to take in that trust document to the bank, and then they will issue an account for it once you have proven that it has a tax ID number and they have confirmed whom the trustee of that trust is. Then once it's funded, all of the bills are paid by the trustee, all of the closing documents are signed by the trustee. And again, the key with this is that everything is signed by and any type of actions are performed by the trustee of that trust. And that is it for the case studies. I'm going to turn it back over to my colleague Scott, and we're going to move into the slides that kind of cover what an individual asked earlier of, is there a limit on, or how do you move funds back from an IRA-owned LLC or trust back to the IRA? So Scott?
Good, great question. Try to get through these last slides, and we're running up against it here with the webinar. I'll make sure we get this done here soon. But moving cash from the LLC or the trust, it's important. It's again a question we do get asked a lot. Is if I set up the checkbook control structure, and I have an LLC and I have a trust and I have my bank account, what if I want to take a distribution and I want to, for medical bills or to go on a vacation, just take a distribution from my IRA? Can I just write myself a check from the LLC or trust and deposit it? And the answer, unfortunately, is no. The reason is Advanta is still the custodian of your IRA account. Even if it's invested in the LLC or trust, we are still acting as a custodian and thus doing all the proper reporting to the IRS whenever you take a distribution. So in order to take cash out of one of those structures, you need to first have that entity send money back to Advanta. We will deposit that money into your IRA account, and then you also send us a distribution form to have us send that money back to you personally. So I know sometimes that seems like a hassle. Why are you sending us money only for us to turn around and send it back to you? And again, the answer is that we are the ones tasked with reporting the 1099 distribution. And it's just better to do it that way anyway, because if you take it out personally, even if you pay tax on it and claim it as a distribution, the IRS could look at that scenario and say, hey, your LLC paid you money personally, and that's prohibited under the rules. And now you've violated the rules as far as prohibited transactions goes, and now your IRA is completely taxable. So even though you think maybe you could argue that with the IRS, the easier, better way to do it, send us the funds. You can ACH that money or wire the money to us, and we can turn around and ACH or wire it right back to you a day or two later. So the money does have to come from that LLC or trust back to the IRA, and then ultimately we will send that money to you when you fill out a distribution form, and we'll do that reporting with the IRS. As we mentioned, sometimes it's when you're partnering with with IRAs, it is the checkbook control. A lot of times is just one IRA, but it is possible to have your IRA and other parties, including other people's IRAs, to partner on different investments, and you can certainly do that inside of an LLC by bringing everybody into that one entity. So rather than having, say, a piece of real estate owned by 3 or 4 people on the deed, it can be easier to form that LLC. And if your IRA is going to be one of the investors, your IRA is just listed as one of the members. So again, people who are a lot of times partnering up, if you have a couple of different individuals all looking to make the same investment, using an LLC can make it easier to manage that particular asset. And again, so the LLC can buy the asset, the LLC can receive income, pay bills, and just share that income with all of the different partners in that same LLC. And again, so if your IRA is investing, again, sometimes checkbook control, and a lot of times it is just your IRA on its own, but it can involve multiple parties. Even disqualified persons can partner with your IRA. Now, you can't have your IRA buy and sell from a disqualified person, but if you're using a disqualified person's money alongside your IRA funds at the same time, that is permissible. But you do want to make sure you take some caution when doing that of the disqualified person, especially if you want to add additional capital. You can run afoul of the rules, the prohibited transactions that we talked about earlier. Always reach out to us with any questions that you have. So I'm going to swing it back to Alex to wrap it up here with some of the pros and cons involved when you're investing, with the IRA directly or using the checkbook control.
Yeah, thanks, Scott. And I see your questions coming in, but just in the interest of people that have to jump off, I'm going to wait till the very end to answer those. We have just a few more slides. Want to make sure people get the general content before we kind of get into those. But for anyone that's asked a question that hasn't been answered yet, just hold on and we will get to those. So what are the pros and cons of buying through the IRA directly? Now, again, remember, there is trade-offs depending on which way you go. The pros are that it is absolutely easier to keep at arm's length from the IRA funds. The IRS does indicate that you have to have a qualified third party hold any IRA funds or assets. Now, you can definitely structure this in the case of checkbook control where you have a little bit tighter control of it. But if you are really adamant about staying true to the letter of exactly what the IRS writes and you want to have that extra layer of protection, just using the IRA directly will definitely allow you to do that. Now, although we don't approve or disapprove of any type of investment, it is a little bit easier for you to not commit or to not have a prohibited transaction in the IRA, just from the simple fact that we are going to at least be reviewing from a relatively high level the documents in which we are signing. So if you send us a lease agreement, we see that the renter has the same last name as you, we'll ask and say, hey, who is this? And if you didn't realize that you can't rent it to your daughter or son, then we'll say, hey, you need to pump the brakes, you can't do this. Whereas you wouldn't get that kind of high level oversight with the checkbook control method. And you also get all of our record keeping services. So you get clear records of activity for everything that happens in the IRA. If you have the account for 10 years, we maintain records of every single bill, every single piece of income, everything with regard to sales and purchases for that IRA for the entirety of the time you have that account. So that's one real big benefit. Some of the cons, you have the potential for some more administrative fees if you have multiple assets. Typically with one asset, you don't necessarily see a cost savings really between utilizing checkbook control versus just utilizing the IRA directly. But if you are someone that's going to be buying or selling a lot of different assets, you definitely have the ability to save some money. And then you also don't have the ability to write checks for immediate purchases. We see this be an issue a lot of the time with people that want to participate in auctions or people that like to do a lot of business face-to-face and maybe want to sign something after hours or in a networking event or if they meet someone on a Zoom call. So you have the ability to write immediate checks for purchases, which is a big one for some people depending on what you're doing. Now, the pros and cons of utilizing checkbook control. So the pros, again, immediate access to the IRA funds for auctions. You can hold more assets with lower fees. You have some potential aspects of asset protection and anonymity. Do keep in mind that the asset protection is really going to fall down to state law with regards to how much asset protection they afford to trusts and LLCs. Typically, LLCs will inherently, more often than not, have some type of asset protection. Trusts, more often than not, do not offer an asset protection. They do offer a lot of anonymity, but for the most part, it's not necessarily an asset protection from a liability standpoint for the IRA. Some of the cons, now you are responsible for keeping accurate records of everything you do with this IRA. You do lack the oversight again, for the small things that may turn into big things. You aren't going to have us to catch that. So you will need to make sure you are very well informed of the rules. That's why we put on educational series like this to help make sure that you understand the rules and you don't run afoul of anything. And you can always give us a call, but at the end of the day, you as the manager are responsible for signing and making sure everything is done correctly. So if that's not something you're sure of, maybe having us act as the administrator and directly do the work for the IRA purchases might actually be a good value to you. And again, a little bit easier to engage in prohibited transactions. So I'm going to turn it back over to Scott, and he's going to take us through to the end for the questions.
So ultimately, really, what is the best strategy for you? Talk with your attorney, talk with a CPA, maybe see which is best, for you to hold your assets. Do you want to have that much control, or are you comfortable having advantages process the investments? You really not necessarily need it. So it's important to note, despite the fact that we're talking about checkbook control and we've been centered on that today, it's something that most clients choose to simply have us hold their assets directly and do the record keeping. So don't feel like this is the way that you would have to go. Again, we can always provide references. We can talk through as well, your strategies, what you're looking to invest in, and see what might make more sense. And again, important to note as well that you can always switch between strategies later. So if you're thinking like checkbook control, sounds like something you might want to do, but you're really not ready for that responsibility, and you're only buying one asset, you can certainly start out with having Advanta administer your account and switching to that strategy later. So we can't provide counsel or tell you which way you have to go or should go, but we can definitely, again, as Alex did a minute ago, lay out some of the pros and cons of what you can do. So before we wrap up, and we'll definitely take the questions, just a note again, we really are committed at Advanta not only to customer service, but the education aspect and really providing people with as much tools, as much information as possible when looking to self-direct their account. We do that through various seminars, online webinars such as the one today, and you can always view those online webinars in our video library. If you just go to our website, click on the YouTube link, it'll take you right there to every archive video we've had, whether it's one with either myself or Alex or one of our other colleagues just talking about self-direction, or some of the times we've had on some really good guests and various experts in different fields related to real estate and taxes and all the things that we talked about today. So definitely check out our video library. We also have launched a new networking event. We have one coming up this Friday, July 31st. We call it Pitch, Promote, and Prosper. It's an opportunity for you to join the Zoom call with as many people as possible, pitch what you're looking to sell or what you're looking to buy. That's something we launched just a few months ago. We usually run those every 2 to 3 weeks or so. So definitely check out our events page on our website and get signed up for one of those. And if you're ready to get started, it's very quick and easy. Filling out the paperwork only takes about 15 minutes, and we'll then get your account moving, get the account going, and start on your investment. Even while we're waiting for the money to be transferred over, we can start working with you towards purchasing whatever asset is that you're looking to make. So at that point, that kind of concludes the prepared remarks in the presentation. So Alex, we have some more questions that popped up.
Yeah, absolutely. So Scott, I'll hand this one to you. We have, can you name the disqualified individuals one more time?
Sure. The disqualified persons for your IRA include yourself as the IRA owner, your spouse, your children and grandchildren and their spouses, and your parents and grandparents are the disqualified individuals. Also, if any of the individuals I just named own or control a business or some other entity, that business or entity is also a disqualified person or a disqualified entity.
Yeah, it's a great point. We typically see the latter of what you were talking about in things like multifamily real estate or limited partnerships, where maybe someone like your father might own it and you want to buy into it with your IRA. They can't sell you their portion of that entity if they personally hold it or control it. We also have the question, do IRA fees charged by Advanta change when using checkbook control techniques? Typically, they will, if anything, they'll remain equal or potentially save you money. If you, especially, you're going to be investing in a lot of different things, like multiple assets, maybe small loans or pieces of raw land, you can definitely help mitigate our fees by by utilizing checkbook control if you're investing in multiple assets. Typically, if you're only doing one asset at a time, you're not going to see much of a cost savings of anything. It just might work a little bit easier and cheaper to do it directly through us. Scott, you covered this slide, so I'm going to ask this one to you. How are RMDs handled through checkbook control IRAs?
Good. So the RMD is kind of the slide that we went through. When it's time to take an RMD and you have, your different holdings in your LLC or your trust and cash, you would figure up the value of your RMD by taking, we use the life expectancy tables, we use the value of your checkbook control structure, and then to simply take that distribution, you would send a check or send funds back from your trust or LLC back to Advanta, and then have us issue that check or money directly back to you as a distribution. And then again, part of the important thing is then we will report that to the IRS on a 1099. So to take your RMD, and really for any distribution for that matter, send the money first from your entity back to the IRA with us, and then fill out a distribution form directing us to send that money to you personally.
Great. Let's see. So we have one that asks, can you add assets from an IRA to the LLC after the initial contribution? I have heard that there are some restrictions on adding assets after the initial contribution to the IRA to the LLC from the IRA. Now, the key here is that the assets have to be owned by the IRA either directly here or another IRA of the same tax qualification. So if you have a piece of real estate that your IRA owns already and you want to move that into an LLC that you formed under that IRA, you can do so if it's a single member LLC. Now, there are a lot of different considerations to give. It's a multi-member LLC with keeping those percentages the same. Especially, it's very keyly important that you do this if you have a disqualified individual partnering with you. So if you, if a couple, an espoused couple, decide to partner in on a multi-member LLC, that's when you really start needing to look at percentages and potentially need to get a legal opinion on doing so. But if it's just a single member IRA-owned LLC, the percentages of ownership are never going to change. So adding in additional capital or assets from an IRA are not going to really be too much of an issue. Now we have one last question that's been popped up. I'll take this one, Scott, since I've done a few different courses on it. How could I go about borrowing money from my solo 401k based on the CARES Act? So with regard to the CARES Act, it has increased the amount of money you can borrow from a solo 401k. So with a solo 401k and 401ks in general, unlike IRAs, you are not able to borrow from an IRA. With a 401k, you are allowed to borrow money out of it in what's called a participant loan. Now, if you'd like to borrow money out of the 401k, you certainly can do so. You just need to contact the plan administrator. In this case, if it was Advanta, you would need to send the funds back if you had some type of LLC structure, and then you would sign a note as the participant of that plan, taking money out of it and agreeing to repay it over the course of 5 years with at least a quarterly payment made each of those 5 years at a point above or below prime. So that's how you would go about taking a distribution from your 401k. The limits have been increased, but your ability to do so has always been there with solo 401k based accounts. And that is the last of our questions. I see people filtering out. We have about half of what we started with. So if anyone has any questions, we'll hang on for another minute or two to get those in there. But if not, once the participants get down a little bit less, we'll go ahead and end it up for everyone. I hope everyone enjoyed today. Thank you very much for attending. These events are something that I personally really enjoy doing. I know Scott does as well. We really do like getting the information out there for people to make informed decisions and have the right tools in their bag to build that financial future that they're looking for. So again, type in any questions and we'll get to those, but I see people dropping off pretty rapidly at this point.
Yeah, Alex, at this point, yeah, I think, again, hope again, same echo what you said. Hope they got something out of it. Again, any questions you have lingering, again, whether checkbook control or not, please reach out to either Alex or myself. Our information is here on this last slide. You can email us, you can call us. We're always available to take those questions. Whether you have an account with us or not, just please reach out when you get a chance. So at this time, we're going to conclude the webinar. I want to thank everybody for attending.